Investor and consumer confidence. The U.S. economy currently lacks direction and targets. Our economy is analogous to an aircraft carrier in motion without a functioning rudder. While our economy has tremendous momentum, it certainly lacks a clear heading, and its future course is anything but certain. It is important to have targets or goals for our economic recovery to be able to ascertain whether our strategy is working or flawed, and whether our tactics are appropriate or not. Our strategy is to stabilize our falling or failing economy and to reverse the current trend back into one of sustained growth and prosperity. Our tactics include stimulus checks to our citizens to encourage immediate spending on consumer goods and services, massive bailouts for certain banks deemed worthy of salvage, consideration of bailing out the big three automakers, restoring a certain degree of consumer credit, and much more, I am certain. Running the printing press to stimulate our economy is dangerous and has predictable outcomes, including the possibility of sudden inflation of prices and wages. When there is too little money in circulation, the economy has deflation, while when there's too much money in circulation, this most assuredly will result in inflation. However, doing nothing at this time will result in further erosion of both consumer and investor confidence. It seems as though both action and inaction are prone to backfire at us. We don't seem to have a good course from which to choose. Looking back at the last 30 years is nearly 20/20 vision. We have deregulated nearly every critical sector of our mixed economy in order to pursue nearly pure capitalism, which is well known to be self-destructive from runaway prices imposed by the monopolies which exist in these sectors. Deregulation has occurred due to unrestrained greed. Deregulation is not alone in causing our current economic crisis. Interest paid on goods and services through financing is too widespread or too pervasive to be serviceable on a sustained basis. Interest rates have been too high for too long on many types of lending, and this has eroded most major currencies, including our U.S. dollar. Leaving the gold standard was necessitated by the advent of mortgages in the 1920s. There was not sufficient gold to back the anticipated increase in the circulating U.S. dollars needed for such a new financial market, such as real estate mortgages. Since leaving the gold standard, the U.S. has expanded the number of U.S. dollars 80-fold. This is an incredible increase and has resulted in the dilution of the U.S. dollar and results in massive interest debt to foreign investors. Outsourcing of 10 million U.S. jobs is the main suspect in the current financial crisis. Deregulation and outsourcing have resulted in the near collapse of the global economy. Both were pursued to preserve what is known to economists and investors as return on investment, another fancy way of saying interest payments. Historically, countries which experience massive unemployment crises have resorted to much more drastic actions to attempt to alleviate the dire unemployment crises for their citizens. During World War II, Germany resorted to both human slavery and genocide following years of recession and depression which impacted Germany from the time of the stock market crash of 1929. Therefore, we must contain the current economic crisis and not permit it to worsen in an unchecked manner. Also, during World War II, many millions of persons died under both Stalin and Hitler. Cambodia under Pol Pot is another recent example of genocide. Darfur today is a current example. More than 160 million humans have perished under genocide in the last 100 years on a global basis. The global economy is in, or nearly in, crisis mode. Rational thinking and clear leadership can salvage us from this terrible situation. Greed works against all rational efforts to resolve our crisis. In my opinion, from my analysis and research, we need to limit interest rates on all types of financial transactions to more modest levels. Secondly, restoration of well-paying jobs is requisite to restoration of the U.S. and global economies. Confidence of investors and consumers will occur whenever sound leadership and sound ideas prevail against greed. At the present time, continued job loss from Ohio and other U.S. states to other countries only worsens the economic situation and further delays restoration of the U.S. and global economies. Adam Smith, the economist, found from his research that countries which made items of value were countries which attained true wealth and prosperity. My fellow Americans, the time to act is now. Restore jobs and reduce interest rates. Our future depends on our collective ability to reason, analyze, and react appropriately. Thank you.